In this video, I will explain how to use heat maps in TradingLite and how to implement them in your trading strategy. First of all, I will encourage you to go to my website, trading-soldier.com, and here you click read the blog, or you go here on last blog post and click the heat map trading strategy, how to use heat maps to trade crypto derivatives. Here I have made a blog post talking about this topic and explaining in depth how to use heat maps with TradingLite. So I encourage you to go there, and also here in this blog post you have my referral link, is this link. So if you decide to use TradingLite for your trading strategy and this video helps you, or you follow me, or you want to help me, you can use my referral link. And as I say here, you will earn a $30 bonus for the subscription with the gold plan. So you will earn $30 and I will earn $30 if you subscribe for the gold subscription. So let's get into it. What are heat maps? Heat maps, in my opinion, and for what I've seen technically, is just a representation of the order book. So if we go here to the right in TradingLite, this is the TradingLite dashboard. We go to the right and we click the order book. We see that, for example, here in the BTC USDT pair on Binance Futures, we can see that the orders that are placed in the order book coincide with the levels of the heat map. So we can say in plain English that a heat map is just a representation, a visual representation of the orders that are placed in the order book, but in a more visual manner to make it more appealing and more easy to interpret. Some people trade with the DOM, that is here, the depth of market, is using the order book to trade, but if you want to use the heat map, these levels are more visual. After this, if you want to set up the heat map in TradingLite, you need to go to indicators. As I see here, I have the indicator heat map loaded. If I close it, you will see the plain chart. You go to indicators, and here you go to official indicators, and you click heat map here as the basic indicators, and you click heat map, and you will see that the heat map activates. So in TradingLite, the heat map is just an indicator. It's just such as in TradingView, you have indicators as VWAP, RSI. They have it here as an indicator. So once it's set up, after this you can select or customize these features of the heat map. So you go here to the left and click here on the second icon, settings, and here you can select all the, no, it's not here. You go chart and you go theme, you go, for example, I go with the thermovision theme that you see here, that is like thermovision, like a vision with, but you can change for example, the default, that is this one that many people use. You can also change for the ocean blue that I also use because it's very light. So we will change, for example, ocean blue for doing this tutorial. And okay, so as I explained before, the heat map is just the representation of the order book. So how can I interpret this information? How can I implement it on my trading strategy? Okay, the first thing that you need to know before using the heat map is the discrimination, how to avoid the sound, the noise of the heat map. As I explained here in my blog post, the second point that I explain in depth is how to filter the noise on the heat map. So in TradingLite, you need to go here and you have this tool here that allows you to set the minimum amount of BTC considered as the threshold, minimum threshold, and the peak, the maximum threshold. So if you go here, for example, I like to have minimum 30 BTC and maximum, for example, 400 BTC, 350 BTC. This way you can see that the orders, if you go too low with the peak, there's a lot of noise. This is impossible to interpret. This is a lot of noise. You are going to be confused, and this is, in my opinion, is worse than better. This doesn't help you to your trading strategy. So this is obviously about your personal preferences. My personal preferences are to set this value at a peak of 350 BTC, more or less, to see only the big players, the big orders. Also, you need to take into account that all these orders that are shown in the heat map, as I've said before, are related to the order book. The order book is made with limit orders. So these orders, for example, this order here that acted as support on $26,000, we have 538 Bitcoin sitting here at this level. So these are limit orders. You need to take into account that these are limit orders. So the heat map shows you limit orders, not market orders. So if someone hits market here and buys market, the price will move and you will not see it as represented in the heat map or in the order book, because as you say, market orders are the taker of liquidity, so they take the liquidity that is already on the market. But limit orders are the maker of liquidity. So for example, if someone is willing to buy here at $26,000 on Bitcoin, you will encounter this order. So they act as a maker of liquidity in the market. So you will not see the market orders. This is a very important point. Well, now you know how to implement the heat map in TradingLite. You know more or less the basics, how to avoid the noise here on the heat map. Now I'm going to try to explain how to trade with the heat map, how to interpret this information and how to implement it in your trading strategy. For what I've said, using TradingLite, and since I am using the heat maps, these lines, the buy orders, also called the bids, often act as support levels. Let's say, if I want to trade here, for example, let's see, I want to enter a long. I will take, for example, my risk-reward ratio tool that is here, and I will place a long above the price, because these orders, as you see here, sometimes price doesn't reach them. So price, for example, here reached this order was removed after that, and after that this order was placed, and the price never come back to this level, because this level is a level with high bidding activity, high liquidity there. So the price often use these levels as a buy walls that are not trespassed, are not pierced. So if I want to place a long trade here, for example, I will place here my risk-reward ratio, for example, at this support level, and I will use these limit orders, this big order here that is sitting in this place, as a protection, as a wall for protecting my stop loss. So my stop loss will be sitting below this order, and then I will trigger my trade and go for my profit. For example, let's see a short example. If I go in this way and I want to open a short position, for example, let's see this order here, I will make it this way, for example. Okay, if this let me, this don't let me, so let me cancel this, let me open it again. Okay, short position. We can see that here was a big order of 400 BTC, more or less. So I will place my risk-reward ratio here, and I will protect my stop loss with this big order, because these orders, as I said before, often act as walls that are not trespassed. that are not pierced when the price goes there. So if you see a lot of activity in a zone, that can make that, for example, to identify these little orders here that are like a bend around the price, often are market makers. I will not explain how market makers work here, but often these little orders that are sitting here like a bend around, that are wrapping the price, they are market makers, but these big orders are the big players. So this is how I use heat maps on TradingLite in my daily trading strategy. I will protect my stop loss with the big orders that I spot in the market, that I see in the market, and I will place my entry point at a level, for example here, that is above the big order, in this case below, in this case above, because I want it to get triggered and then continue the move, okay? One thing to take into consideration, one thing that is more important here in the heat maps is spoofing, okay? Spoofing is a practice very common in cryptocurrencies. Was also common in legacy markets such as Nasdaq or S&P 500 or other kinds of markets in the legacy markets. So spoofing consists, for example, of this. Let's see this example. You see this big order here of 500 BTC. This order was maintained all this time here. So if you apply the strategy that I told you before to use this order as a buy wall, so let me cancel this. Let's see how spoofing can fool us and can confuse you in your trading. So if I do what I told you before, let's say I will open a long here, no? I'm very sure I spot this order in the market, and I say, okay, here are, let me see, in this moment, for 400 BTC sitting here. So the price will not hit this order and will bounce and will trigger my trade and reverse, okay? That is what happened before, after the level was pierced. But here, as you can see, this order was removed. This is spoofing. They place a big order to make you think that there is a support or resistance level there waiting to get filled. You, by the assumptions that I explained you before, think, okay, often these big orders never get filled, so the price before hitting them bounces, so I will place my entry point before the order, my stop loss below the order, acting as a wall to protect my stop loss, and I will reverse the market and I will have a successful trade. That is what happened after this. As you see, the market goes here, the order is removed. Let's see that the price, if you make zooms here, you have a zooming here, you see that here the order was removed, and then the market, the price of Bitcoin, pierces this level, goes lower, liquidates all the positions here, triggers also the orders that are placed below this order, that are protected below this order, and then the market here consolidates, and then reverses to the level that I predicted here. This order was spoofing. This order was placed for a long time, because if we go more in the past of the chart, we see that this level, the 28,000 level of Bitcoin, was a level with big orders sitting there, but here was removed. This was spoofing. This was a spoofing order. This is a very heavy example, but also spoofing happens on low time frames. When you are going to trade in low time frames, for example, they are orders that are placed here, and often they are removed immediately before get triggered. So they push the price into the areas they want with these orders, these fake orders that are sitting at the levels they want, because the price goes usually, not always, in the opposite direction of the big orders. As you see here, here is a big order and the price is bouncing from it, is acting as resistance in this case. So if this order now gets removed, the price will pierce this, because there's no selling pressure here, or there's no buying pressure in this case. So spoofing is this, is a fake order that is published in the order book in the market. So this order confuses you, makes you think that this level is a level that the price will bounce, will act as support or as resistance, and then you place your setup, as I explained before, with your risk reward. You protect your stop loss with the order, but they remove the order, or the order gets filled and you get screwed and your trade goes south. So this is a very important thing that you need to take into account before using heat maps, spoofing. This is a very common practice in cryptocurrencies market, because they are not heavily regulated like legacy markets. So this is how personally trade with heat maps. Also, I need you to say that heat maps are not this kind of unicorn indicator that with heat maps you are going to be the perfect and most profitable trader in the world. No, I use heat maps as confluence. For example, in my analysis here on TradingLite, I use heat maps, yes, but I also use volume profiles, VPVRs. I also use open interest. I also use CVDs. I also use liquidations, and this is also complemented with my trading, legacy trading, or other indicators on TradingView. For example, I use other indicators. Okay, so what I want to say with this is that you don't think that, for example, TradingLite is one charting software that uses heat maps, but also existing other heat maps charting softwares like Bookmap or other there are other players in the market, and they all sell it like you need this. With this charting software, you are going to see the orders in the market, you are going to see what nobody else sees. That is not entirely true, because heat maps, as I've said before, is just an indicator, is just one tool of your arsenal. So you need to search for confluence. You need to search for confluence with the heat maps. Also interpret the derivatives data as open interest, CVDs, liquidations. Also with levels, order blocks. Okay, heat maps are not meant to use alone. I don't want you to think that if you use heat maps, you will be the perfect trader in the world. You are going to make all your trades profitable. This is impossible. Trading is a very difficult job, and heat maps will help. If maybe work for you, will help you. But also, you can see that they are not 100% of the time accurate, because they are practice, such as spoofing, as I explained before, that may confuse you and may invalidate your first assumptions on the market. So, as I said before, please visit my website, trading-soldier.com, and go to the blog. If you write here /blog, now I only made one blog post, but it is the blog post that I am explaining here in this video. And okay, that's it for today. Please, if you like the video, subscribe to the channel, give a like, and leave me a comment. Let me know what you think about heat maps, about TradingLite. Let me think if you use it, TradingLite. I remember you that if you want to use TradingLite, if you go to my website and to this blog where I explain more in depth the heat maps and how to use them in a text format, Here is my referral link, and we earn $30 bonus if you use it. So also follow me on Twitter, that I use more often, more daily. I publish a lot of posts here. I retweet other people content, and that's it for today. We see you on the next video.